Hello and welcome to the Business Leader Future Tech Trends debate. My name is Oli Ballard from Business Leader. So why are we hosting this debate today? Well, for the month of January, it has been Tech Month at Business Leader, and we have been exploring all the issues and topics affecting the sector. And the month will now conclude with a debate where we discuss these in more detail. I just want to shout out to our sponsors for Tech Month, VWV. We have Nathan Guest from their firm today, and they are a national law firm who specialize in tech and many other sectors. So do go check them out after this debate. And our panel today, we've got a great panel. We have Glyn Blaize, who's Group Chief Operations Officer at Amdaris. Good morning, Glyn. We have Oli Cook, who's the co-founder and CEO of Ekko. Morning, Oli. We have Nathan Guest, as I mentioned earlier, who's the partner at VWV. We have Emma Thompson, who is Chief Communications Officer at Tech Nation. And we have Joshua Rowe, who is Head of M&A at ClearCourse LLP, who are a software business. Well, we will now start the debate, and the audience can participate by sending in questions. If you haven't already, you can do that via businessleader.co.uk, and that's questions@businessleader.co.uk if you have any questions for our panel. So firstly, a big welcome, and tech is a big subject, so we're going to try and cover quite a lot of verticals and areas today, and we're going to start with kind of general trends. And Nathan, I think it would be good to start with you. I know you took part in this debate last year when we had our Tech Months. It's really, really good to get your insight. And how would you kind of sum up the last year in the tech sector, and what trends are you seeing, Nathan?
Hi, Oli. Morning, everyone. Well, in a word, it's been busy, Oli. As you can see, I haven't even had time to shave. I mean, there's been a huge amount of investment globally, nationally, regionally into tech companies. There's a lot of money in venture capital and private equity firms looking for a good home. And we've been fortunate to work with quite a few companies over the last sort of 12 months to receive that investment. So that's been good. I mean, I don't want to steal Emma's thunder here, but I'm sure she'll take us through some of the statistics that the fabulous Tech Nation report has highlighted. Perhaps not surprisingly, in a pandemic, we've seen a bit of a surge in all things health tech, biotech, deep tech, life sciences, and that as a subset of our tech sector work has been significant over the last kind of 24 months. There's been a real surge in M&A activity in the sector. A lot of that has been fueled by some astonishing stats coming out of sort of private equity in terms of buy and build strategies, which I'm sure we'll come back to a bit later. I mean, we're only a few weeks into 2022, and already in the last 3 weeks, we've had 3 new tech M&A instructions, which is great. Interestingly, 2 of those exits are looking like being exits to overseas buyers, which again is another increasing trend, which we probably come back to later in this session. It's not been plain sailing. There's lots of issues fueled by pandemic, Brexit, fires in Chinese silicon chip manufacturing installations, and that sort of last point has caused certain clients in certain industries real headaches, particularly in automotive that we've seen. But yeah, it's been a busy year, Oli.
Nathan, for that kind of intro and insight. It's interesting you mentioned the M&A activity and the buy and build strategy. We've got Joshua Rowe here from ClearCourse who's going to talk about that later as well. So it's a really interesting. And you mentioned the Tech Nation 2021 report there, and it is comprehensive, and it's called The Future UK Tech Built. And Emma, I appreciate it is a huge report, but what would you kind of say are those kind of headline key findings? And Nathan mentioned kind of healthcare and biotech, and just some of the verticals that you're seeing growing fast.
Yeah, sure. The full report's on technation.io. As you said, it's quite a long read, but some highlights and stats in a few buckets, if I may. So on the global level, we talked about the VC investment, and the UK remained third behind US and China for investment. We hit £29.4 billion of VC investment in 2021, and that was up from 11.5 billion in 2020. So a 2.3 increase on that. A lot of that investment did come from overseas. I think we were looking about 60%. So Nathan was right on that stat. But at a national level, 9 billion went into startups and scale-ups outside of the southeast. So that's good for the country and the levelling up agenda that we're seeing gather pace. We hit the 100th unicorn in 2020, which was tractable, and that was in June. And we've hit 117 now. We've already had the first of this year, and that was Wave. But tech is still really important to the UK. It's contributing a 7% year-on-year contribution to our GVA, the gross value add, the productivity to the economy. We've got 3 million people employed in UK tech. That's 9% of the workforce, and 13% of all job vacancies are actually in the UK tech sector. And we also saw the dialogue in 2021 coming into this year shifting from, do we have enough startups, to do we have enough scale-ups, do we have enough unicorns, decacorns, and now we're kind of onto this chapter of, have we got enough IPO and listings happening within the UK tech ecosystem. But for the scale-ups themselves, they were the 5 areas that they've always told us that were enduring for them. So that's access to finance, talent, markets, customers, infrastructure. But in the last year, we've seen them want to internationalize faster, particularly wanting to go to markets like the US and Asia, but really doubling down on access to talent, making sure that they can attract, develop, retain, retrain talent into the organisations. It's a global battle for talent. We're competing against other nations, not just within companies within the UK. And we saw a rise in mental health and well-being and hybrid working, of course, and scale-ups trying to find out what they should be doing going forward in 22. Very quickly on the sectors, and I know we'll cover them a little bit more later. The top 3 were fintech, health tech, and enterprise software in terms of investment and growth. But we're seeing deep tech, impact tech, and some really interesting niche ones that the UK can own globally. Reg tech, law tech, embedded finance, they're all coming up as well.
No, thanks, Emma. Really good overview there. I know there's a lot to cover in the report, so it's worth going to look at that. I mean, you mentioned, this is has been a great year for tech. I mean, 26 billion in venture capital, record London listings, all those things you mentioned, and you it was good to see that regional variation there, Emma, as well, and obviously some of the verticals that are doing well. You mentioned the top 3 there. Just looking forward in terms of investment, just quickly, Emma, where do you see that money? Is it going to continue to go in those top 3 verticals, or are there some that are going to emerge?
Fintech, I think we would all probably agree, is the crown jewels of the UK. We're second in the world actually for fintech investment, but the highest growth was in net zero and deep in terms of year-on-year growth, as well as deep tech. And I think that deep tech growth is really good news for the UK if we have ambitions to be a science superpower and driving the productivity and having really good AI data-based deep tech organisations. So those were the 2 where there was the fastest growth, but fintech still takes the majority of that VC investment at the moment.
No, thanks, Emma. A really good insight there. And just on IPOs, probably Emma and Nathan as well. I guess we're seeing growth in tech firms listing as well, aren't we?
I can cover the stats, and Nathan, you'll probably have a lot more colour, but of the 126 companies that listed on the London Stock Exchange, 37 were tech and consumer internet companies in the last year. So they accounted for all of them, 39% of all the capital raised on the London Stock Exchange. So it was a really good year. Remember, it's Trustpilot, Wise doing the largest ever direct listing, Oxford Nanopore, and of course Trustpilot was a Danish company listing in the UK, and we've seen other companies coming from the US and Canada. But we all need to get behind that to continue that trend and change the narrative around why it's so great to list in the UK.
Thanks, Nathan. Is there anything you wanted to add there?
No, I mean it's a play for access to capital, as always. The liquidity of those companies is attractive. It enables them to go out and buy other companies and more readily use their own share capital as part of the purchase price rather than cash. So nothing about that has changed. As Emma says, it's good to see an increase in that, as well as we've seen in the private markets. I mean, there's an interesting movement in some companies towards these sort of SPAC listings in the States, which is interesting. Not something I have to say I know too much about, but I think we'll be hearing more about that over the course of the next 12 months.
No, thanks, Nathan. And it was mentioned, I mean, overriding all of this is obviously sustainability, and quite rightly so. And it's going to be good to speak to Oli Cook about that in a bit. And some really, really great figures there, but there are challenges as well, which we will delve into more in a bit. But I just want to, at this stage, bring in Joshua Rowe from ClearCourse. Joshua is head of M&A at ClearCourse, so he's got some really good insights there. But I just want to ask you, Joshua, obviously looking beyond big tech and those types of companies that do list, what are the trends you're noticing in the behavior of small and medium-sized tech companies? I think Josh.
Yeah, no, I'm not now. I think a couple things come to mind, probably the most. We buy a lot of small businesses, and so we see a lot of common themes, and I think some of those themes are what drive them, a lot of small and medium-sized businesses, to look for potential exit. As I said, we buy a lot of companies, so they're speaking to us because they're looking to sell. I think as a small business in the UK, more than anything now, access to talent is tough. There's a shortage of development resource. It's difficult as a small company to flex into offshore development resources, and so becoming part of a broader group like ClearCourse potentially gives them access to a wider pool of resources, particularly skills to scale up in a way that would be hard for them. As much as there is access to capital, I think for small and medium businesses, there's not always as much of a VC outlet, or certainly not private equity outlet, as we'd like to believe. So even small businesses, really small ones that we look at, I think it's not like they're being courted by an enormous amount of VC funding. And so trading through COVID and other things, I think puts a lot of owners in potentially a difficult position where they're looking for avenues to either exit or raise capital. I think in terms of functionality, a lot of small businesses that we own and that we look at where they're seeing demand, and this is probably not surprising because of COVID, and some of the challenges it brought in terms of isolation and people not being able to go places physically, is really flexing into digital solutions that allow their customers to sort of extend the connections to their end customers. In other words, we buy a lot of businesses, for instance, that provide EPOS solutions, which let a variety of high street retailers sell things. So the demand there for them to move from what was really a bricks and mortar type of situation to an e-commerce solution, or for restaurants to be able to sell gift vouchers as a way to supplement reducing in-store sales, or just being able to orchestrate with customers to book tables in advance. Those types of digital solutions across our whole portfolio are in huge demand. And I think those are probably decisions that a lot of end customers were kicking down the road a little bit, like it'd be nice to have, but we don't know people will use them. Whereas now there's a huge demand to put them in play because they need them in play to react to changes that have happened because of COVID and just changes that could come in the future. So I think probably digital solutions are I'm using that as a blanket term, but I think a lot of the businesses that we own, they're struggling or trying to figure out ways that they can implement these types of solutions to meet that demand. And then I think also one of the things that really attract, we believe, small businesses to join the ClearCourse group is we give them more firepower. In other words, if you're a small business, and I'll give you an example, that's selling a membership solution to a charity, for instance, that might just be a CRM platform or something like that. If they join our group, and this is maybe the appeal for buy and build, which we'll talk about later, suddenly you have access to maybe a wider scope of solutions. Maybe you have a payments integration now that could be fully integrated in a way that you couldn't get before, or other data solutions that we can buy in bulk that they can't do. And I think as a small business, having just a lot more depth in the value that you can bring to a customer. Not only makes you more attractive, but also makes you stickier. And it's usually solutions that you couldn't build yourself. You don't have the capital to build yourself. And I think from a small business perspective, I see how that's valuable, because it allows you to leapfrog your competition in terms of functionality in a way that you couldn't before. So I'm not sure if that was a coherent path that you wanted me to travel there, but those are some of the key things that we see as reasons why small businesses like ClearCourse as a buy and build strategy home, and some of the challenges that we see that we're trying to help them solve, frankly, day in and day out.
No, thanks, Joshua. No, that was a good course you were on there, and we will talk about buy and build later as well. Yeah, it's been interesting to set the scene there and talk about some trends. And I want to welcome Glyn Blaize from Amdaris, a very fast-growing tech company in the UK. Morning, Glyn. I just want to talk to you about your perspective. You're a tech business that is scaling at the moment. What are some of the challenges that you are seeing, Glyn?
Hi, good morning. Yes, I suppose we're quite an interesting company in terms of we're not a product company just doing one product. We are a software solutions provider where we will provide we will outsource developers to clients who are looking to sort of build their tech products. I think with the onset of the pandemic, there was that internal worry that the market was going to contract, and business was going to capitulate, and it feels kind of like the opposite happened. And for us, I mean, echoing what Emma was saying, from healthcare and fintech, those clients that we were dealing with, things over the last year, 2021, grew quite considerably. So we've seen a real sort of growth in our portfolio, and where it's been quite exciting, I guess, for us is that we're not necessarily specializing in one vertical. So we're not just a fintech or a health tech or a prop tech supplier in terms of supplying resources to. We work in a number of verticals, which has enabled us really just to see what's happening in the marketplace. And I think one of the biggest trends for us, which was kind of unexpected from a client perspective, was this growth in UI and UX, which became like a separate revenue stream for us over the last, sort of 12, 15 months, which just continues to grow at quite an increasing rate. I think the challenge for me, if I think about, what keeps me awake at night, goes back to, what Joshua was saying, is this battle for talent. So obviously we are providing development resources to the multiples of clients that we're bringing in. We've got a very strong sales and commercial team who are bringing more business into Amdaris, but at the same time there is this global shortage of the tech talent being available. And I guess there's sort of also trends in the market which are changing. So what we are kind of seeing is this whole single page application. So whereas in the old days, shall we call it, you had the developer who was a full stack developer and could do everything. We're now seeing that the demand for, let's say, for instance, front end in technologies like React, Angular, Vue, those different technologies, the demand is just growing at such a rapid rate, and actually the supply of those type of individuals is not growing at a rate which is sort of commensurate with that. So we're even seeing where most of our centers are based in Eastern Europe. We're seeing many clients opening up centers in Eastern Europe. We're seeing clients going further afield, into Southern America, going across to Indonesia to open centers whereby they can find the talent at a price which is, which works in terms of that growth. But I think, everything that, both Emma and Joshua are saying is that this market the tech market seems to be growing exponentially. And it's not just a UK thing. It seems to be a very much a global thing. And the big headache, I guess, at the moment is about the demand and the supply of those resources for that.
No, thanks, Glyn. Really interesting. You mentioned talent there. I want to kind of delve into that a little bit more with yourself and some of the other panel members. Just want to, before I do that, welcome kind of Oli to the panel. I want to kind of ask the same question to you, Oli, and also I just want to get your opinion on whether you're seeing more companies focusing on sustainability now and having, tackling climate change, on their agenda, not just talking about it, but actually kind of doing things. So is the mood music being matched by action, essentially, Oli, and your kind of thoughts on that?
Yeah, I guess, so we kind of cross over ekko, fintech and green tech. So we're in that kind of the space where it's very popular right now, and as Emma touched on, these are kind of the growth areas, which is really, really interesting. I think from a few things we've talked about, I'll just kind of cover ekko's view is that the perspective we're getting is that money is starting to flow to businesses like ours who are kind of combining those two things. That's really interesting as a growth area for us. I think as a trend, but the trends we're seeing is, and it touched on something both Joshua and Glyn said, is the UX UI. So you can no longer, in our space, certainly from a tech perspective, get away with a shoddy MVP, which used to be the way. You could get away with something that didn't look right, or was a bit buggy, and then you grow your business and you build from there. That doesn't really happen anymore. And certainly in our space where we look after people's money, the expectation, because of other tech businesses before us, is so high. The quality needs to be so much better. And the UX, the UI needs to be first class from day one. It's not something you can come back to in a year's time and get right in the future phase. You need to have that right from day one. And that changes what you need from a development perspective. You need to have more people who are focused on consumer thinking and designer thinking and the engineers to help them, rather than just building pure tech without thinking about the consumer. So that's quite an interesting trend. From a sustainability perspective, the mood music's changing, and I've noticed over the last 12 months significantly people are taking climate change and sustainability more seriously. I think that's both in the startup space where people are building businesses, and there's a big community of sustainable businesses who are working together on these big ambitions which we're working on. But from a big business perspective, I think what people are realizing, and they knew it already, but when you look at it in the collar today, maybe they're analyzing it slightly differently, is that it's a really complex space, and it's really hard to understand your impact and how to do your bit when you've been running for 20, 30 years as an organization, not really focusing on this at all. And that's resulting in people making big pledges, which they don't necessarily know how they're going to do, or that it's actually going to make a material impact. And it's not enough for sure, but at least it's people starting to think about the space and starting to think about it. And that will continue to grow. And the reality is, like I said, it's complex. Understanding your carbon footprint is really complex. Understanding your impact is really complex. And it's not just on climate change, and loads of other factors in the SDGs that you need to think about. And that takes time. And I'm seeing the mood music is definitely changing. People are looking at it, people are focusing on it. But the solutions we're at now will be nothing compared to where we are in 5 years' time, both from startup perspective and big business perspective, as people figure out what it means for them and their impact.
No, thanks, Oli. So just to kind of summarize this, so you expect, big change and in the next 5 years then?
Oh, 100%. I think that what we're doing and what all the kind of the Green Tech Alliance and people in our community are building is going to be totally different in 5 years' time. If we figure out, we get better at stuff, we use tech in different ways, data sources get better and better and better, and we can serve people better. So I guess this is just the start. And I guess what's interesting in the trend when it comes to sustainability, if you call it a trend, is it's not going away, right? That it's not a trend that can be surpassed by something else, the new sexy hot thing. That doesn't exist. This is the biggest thing we're going to have to focus on as society. Therefore, more and more money will flow to it, and the solutions will get better. The businesses that work on it will get better. Big businesses will have to do more in this space, and we're only at the very beginning of it. So I think that's incredibly exciting, and like Emma touched on, that's why it's one of the growing areas, the future unicorns and decacorns, because this has to be for all of us. It's part of our DNA. It has to.
No, thanks, Oli. Is there anyone in the panel who wants to kind of build on what Oli said there about sustainability? Yeah, Nathan, we'll come to yourself.
Yeah, I was just going to add to what Oli was saying. I mean, I think one of the most interesting stats that comes out of the Tech Nation report is the stat around the difference between sort of tech for good investment in the UK versus the US. I mean, it's staggering. I mean, I took note of this because it was so staggering. But impact investment increased 160% in the UK since 2018, and in the same period, 15% in the US. So we're doing something right in the UK. with impact investment. And I accept that is a much broader term than simply environmental technologies, but they are key to it. And I absolutely echo everything Oli said. This isn't going away, it's going to increase. We're going to see more money piling into this, rightly, as new technologies, things that people haven't even thought of yet, are developed, and established companies of all sizes are recognizing how much more important this is. And that is going to be driven by a number of factors. It'll be driven by government policy, inevitably. It'll be driven by consumer spending and that sort of thing. And it'll be driven by staff. Staff are expecting companies, and that when they are making their decision about where to go, the sort of ESG factors are going to become increasingly important. And companies that don't take that seriously are going to struggle even more to recruit from what is, as we already know, a scarce talent pool.
Thanks, Nathan. Yeah, it's certainly very exciting space. Glyn, did you want to say something as well?
Nathan just said it, but just as empirical evidence, just in terms of this, the staff who we are hiring, and as we go out into the marketplace, it is just so interesting that it's not now just about the job and the projects that these staff are working on. They are so interested in how you position yourself in terms of how you view the planet and how you view that sort of ESG conversation. And it's a real place where you may lose someone quite good people who you want to hire, purely based on how you position yourself and how your business sees itself in that space.
No, thanks, Glyn. It's definitely being driven by people and employees as well, isn't it? And quite rightly. Emma, was there anything you wanted to add on this thread?
Well, Nathan gave the stats, so thank you for that. And we're also seeing a trend that if we are going to have the investment, we're going to have to be more comfortable with longer return on investment as well. When you're having to invest in hardware and longer returns for net zero decarbonisation, so there's going to have to be some movement in that return on investment we're looking for. And it's not just net zero where we can help organisations. We've got a net zero toolkit, a D&I toolkit, and a fintech collaboration toolkit, because these are all things that organisations are struggling with to get right, but they know they have to get it right to get this battle for talent. If you don't have the right purpose and the right culture, it's going to be really hard. And the Edelman Trust Index, which came out this week, showed that businesses are trusted more than media and government. Obviously not you, Oli, but it shows that business really have that role to play in responsible business and standing up and battling against some of these challenges.
Thanks for that shout out there, Emma. It's an interesting stat there, and where they kind of align. And you mentioned kind of talent there. That is what I wanted to kind of move on to next. I know Glyn kind of touched on that and some of the challenges Amdaris are facing. And I guess I don't know how much insight you can give into this, Nathan, but in terms of your kind of customer base, how are they kind of tackling the issue of attracting the right talent? Are you seeing more offshoring, or is it more investing in talent? And it'd be good to get your perspective there, Nathan.
Yeah, I think there's undoubtedly there's an issue here with the scarcity of talent. It's in a way it's one of the unfortunate byproducts of having so much more, such a significant increase in the amount of fundraising going on in the UK, because a huge proportion of the funds that companies raise goes on people. And I think this is being felt in the UK, and it's probably felt even more keenly in the regions. I'm based in Bristol, and we've got some fabulous businesses based down here, not least of which is Amdaris. But we've got some seriously large companies now, scale-ups, that have raised absolutely eye-watering amounts of money. And the problem is a lot of them are looking for the same sort of people. So those people just don't exist, or they do, but they're being picked off by the companies who raise more money. You can afford to pay them more. So we are seeing people outsourcing work to development companies. Seeing that a lot. We're seeing a lot more offshoring going on, because there is a bit more of a talent pool out there if you broaden your horizons. I think in a way the pandemic has helped that, because companies have got used to remote working and hybrid working. it's difficult, I think, in startups and scale-ups because, you know, culture is so important in scale-ups, and so, you know, that is not that's not ideal, but it's a necessity. So we're going to see more of that, and I think, you know, the challenge for the sort of startups and scale-ups is you've got some very large, you know, established corporates out there who are also looking for talented people. They can afford to throw an awful lot more in terms of you know, benefits in kind and what have you than perhaps scale-ups are able to do. But yeah, there are lots of things that startups and scale-ups can do. ESG we've talked about, get that right. You know, I'm a massive fan of share option schemes structured correctly. They can be a huge advantage in terms of not only recruiting really good people, but actually, just as importantly, encouraging them to stay. Because one of the biggest frustrations I know Glyn and others will feel is, you know, you go through this battle to recruit the right people, you get them on board, you get them embedded, and then they get picked off, and you're back to square one. And so, you know, there are ways in which you can, as an organisation, mitigate. You can't extinguish that risk, but you can certainly mitigate against it.
No, thanks, Nathan. It's Oli, I just want to get your thoughts on this. This is an interesting point. You know, the difference, you know, startup and a scale up. You know, it's culture led, isn't it? There is an argument you need more kind of contact time with the people, whereas a corporate that might be different. Then you have the playoff against kind of resources. I mean, where do you see that in terms of where you want to kind of grow your business and how you want to kind of interact with your staff, Oli?
Yeah, culture for us, as Nathan touched on, is hugely important. We're a startup organisation, we're growing, that's vital. But maybe we're slightly different in that the business was built remotely because it's built throughout COVID. The idea came in the middle of COVID. And so we don't have a problem which I think other businesses have, which is how do I go from being a culture where we're all together and having a stand up every day and into remote and into hybrid. Actually, we started remote, and therefore the culture is built that way. And if we do more kind of hybrid working, that's only going to be an additive to where we're at. So our team, all over the UK, we're actually all over the world. We've got teams in South Africa and all over the place. And actually, I'm just as connected to my guys out in South Africa as I am my team up in Manchester or my team who are 10 miles down the road from me, because we've never got the opportunity where a few of us get together and you guys are on the phone, and therefore you get the whole, you miss out on the chit chat. That doesn't really happen because we've been remote and we're all like that anyway. So I think our challenge might become slightly differently is when we do get into more hybrid working and that we do get an office in the future and that it's worth us going in once or twice a week. Actually, that might disrupt our culture versus where we are now, where our culture is built remotely. And I think that's the challenge I'm going to have to face, is to how do we do that and keep the ekko vibe that we've got, that everyone's so happy and so positive, when wait a second, clicks start happening, which weren't there before. I think it's a really interesting trend that maybe there's a few businesses like us who started this way. In our little unique world, it's a different challenge we're facing. Yeah,
no, that is definitely interesting. Like, you often hear it the other way around, isn't you? Where they've gone from the office to so they're really interesting insight there. And Josh, I guess, you know, ClearCourse is you know, considered a large company. I realise you're head of M&A, not head of people. But do you have any insight into you know, the challenge you're facing around talent and feed on what kind of Nathan and Oli and Glyn have said?
I think from our perspective, the ability to attract the right people is acute. Often, I mean, we own 35 software businesses, and many of them are fairly niche. So it's even worse when you're not only trying to attract somebody that's got, say, .NET skills, but .NET skills applied to dental practice software. You know, so for us, it's not super easy to solve the problem of technology and staff shortages purely by moving offshore, because you need to have some of the vertical knowledge in addition to the tech skills. So what we try to do, or what we're trying to do, is get all of the businesses to start thinking about how much of their technology is what we'd call sort of bespoke to them or important to them, and how much of that technology development can be done more in an aggregated fashion. So we find like infrastructure support is something that if you're using, you know, if you're in a .NET world and everything is in Azure, for instance, you could probably standardize how that's being done from an infrastructure support perspective and move some of that offshore. And again, I think we're you know, because there's staff shortages, and no matter what we do, it's going to be hard for us to find the right talent and to keep them. We're trying to think of creative ways that we could start to ring fence certain types of activities that are like and similar across all the portfolio, in hopes that we could maybe use some offshore resources or nearshore resources to source talent there more effectively. But I don't think we necessarily have some sort of silver bullet. In fact, I'd say in many cases it's harder for us because it's not just the technology resource, but it's the sort of vertical knowledge as well matched together, which is hard to find. We tend to make sure that we compensate people as highly as we can. It's sometimes more punitive for us to lose someone than not. So I think we sort of pay up and just suck it, you know, if that makes sense, because we can't afford sometimes to lose people.
No, that's really interesting, and those kind of niche skills that you need across all those software businesses. Yeah, it must be a real challenge. I mean, yeah, time is running away with us, so we'll take questions from the audience at 1:45. So we only have about 10 minutes left, but so do send your questions in. But one question I did want to ask, and it was kind of directed at Emma, and then we can kind of have others feed in, is, and you did mention it at the start, but just how the UK compares with China, Singapore, Amsterdam, you know, these other kind of tech locations, and how our ecosystem does compare, and what we can do better, Emma.
So the UK has got many strengths, and as I mentioned, we've kind of gone from startups to scale ups to unicorns, decacorns, but it's really important that we don't rest on our laurels, and it's coming together as an ecosystem. We have got a pro-tech government who've been trying to modernise with the listings review, the Lord Hill review. We've had the FinTech Khalifa review. We've got Help to Grow Digital, which launched this week to help SMEs. So there's lots of good stuff happening, but we need to keep pressing ahead so that we're focused on the global markets and maybe not just looking backwards at Europe. You know, Macron was tweeting about the 25th unicorn on the day we got our 117th, which I thought was absolutely fantastic. But we are seeing Estonia thinking about nomad visas. We are seeing Singapore wanting to challenge us on what we're doing in the law tech space. We are seeing things like SPACs coming up, and Amsterdam doing very well in that, and you know, different regimes and around the different tax regimes. So we have to make sure that we keep on that front foot with the business environment, but make the most of what we've got, the global talent visas. And we did a piece of work to understand why people are coming to the UK and to London, and it's because they can really find their tribe in the UK, more so than any other tech ecosystem. And you know, when you come to London in the UK, you can meet so much expertise, lawyers, IP specialists, fintech specialists, you know, financial specialists to help you IPO, all in one short space in London or in different cities. And we specialize in so many different sectors that, and they told us it's about finding their tribe, and we've really got to hold on to that, which makes the UK tech ecosystem special versus those competitors globally.
Really interesting there, Emma, and it's probably one, yeah, and we'll just mention this as well and bring in Nathan. But I guess the UK's robust legal system is you know, a big attraction as well, Emma.
Have some really good pillars that, like law tech, like the city, like fintech, reg tech, all the stuff that you need to underpin a really good tech ecosystem. And we talked about impact tech and tech for good earlier. The UK is really good at embedding that type of ethos in its tech ecosystem as well. And that puts that responsible tech leadership in the UK's hands. And we challenge ourselves and potentially other nations to kind of hold ourselves to account. And that's another string to our bow. But Nathan, go on, I could see you wanted to add.
I was just going to add to what you were saying, but I think, you know, the UK is outperforming, you know, a great number of other economies, which is fantastic. I think we're also really good at building tech ecosystems. I mean, in the UK, we have numerous sort of separate, but in some respects connected ecosystems, and often they're built around certain specific verticals. And clearly, fintech, the UK capital for fintech is not surprisingly London. But you know, you've got sort of, you know, Bristol and Bath, the West Midlands, rapidly growing tech ecosystem. Obviously, you've got the kind of Cambridge and Golden Triangle, Manchester. We're so fortunate that we've got these established, globally strong and globally regarded tech ecosystems, and we've got others coming. I mean, you only have to look at what's going on in and around Cheltenham with Cyber Central. I mean, that will become the global #1 cybersecurity ecosystem. I don't doubt it for a second. It's got a bit of advantage with a certain donut-shaped building around the corner, but that is going to be huge, and that is I don't have any doubts or concerns about how successful that's going to be. So we are really good at building ecosystems. I completely echo what Emma says, though, in terms of we need to be looking further afield. In terms of the point about government activity and government policy, not this government, because some of this predates, but we've got such a favourable tax regime in terms of SEIS, EIS, R&D tax credits. This is a great place. The UK is a great place to start and scale a business, because there's all sorts of encouragement for angels and others to make investments into what is a risk environment. But yeah, sorry.
No. Thanks. That is interesting what you say about that tax kind of infrastructure that we have. It's a lot easier than a lot of other countries, isn't it? With some of those kind of schemes that you mentioned there, Nathan. So lots of positive things. Is anything else? Did anybody else want to add to kind of that thread? No, that's always good. So thanks for that. And just Josh, I just wanted to kind of touch on it. We started the debate around kind of M&A, just briefly, because one is going to get your thoughts on buy and build strategies. I know it's something you're doing at ClearCourse, but is that why is that becoming more popular now in the UK?
Well, I have a couple thoughts on this. I can't say that I've done this sort of empirical research, but I mean, I work for a buy and build strategy, and I think a lot of buy and build strategies they cover a lot of different themes. But for those that don't know what they are or want kind of a quick tutorial, essentially it's usually a private equity funded strategy. It's starting from scratch or starting from an initial foundation acquisition, with the idea that you're buying loads and loads of businesses to build scale. I think that works in the UK for a variety of reasons. I think it's a mature tech environment. There's lots of investors. There's lots of software and tech businesses. But I think in general the makeup of technology businesses in the UK isn't uniform, and so in such that there's a lot of small and medium-sized businesses, and then there's like a huge trough of nothingness where there's not a huge amount of what I'd call mid-sized businesses, and then there's a lot of, well, maybe not even a lot, but there's a decent amount of large tech companies. It's that missing in the middle piece that I think is attractive for buy and build strategies, because the bigger companies that are listed or not listed have high valuations, significant, and some of those are sort of mentioned already. So if you can buy a lot of smaller businesses and build scale and buy them at reasonably attractive valuations, which you usually can, because there's a discount for a small business, and build something that's significantly sizable, then you'll get the attention of larger investors because you'll be a larger business and get a write-up in valuations. And I know that sounds just simple, but that's in many cases, that's really what it is. Now, from our perspective, it's not enough just to buy a bunch of businesses and just hold them together. You're just a portfolio at that point. You want to add some layer of value. For us, that's basically providing a fully FCA registered payment institution integration. So we buy businesses and software that have integrations to payments. Once we own them, we move those payments to our own platform, hopefully getting more profit from that small business than they could generate themselves through a combination of what they do today and payments. Those strategies have been prolific in the US. And I'd say they're maybe on their third or even fourth generation. Our private equity owner, who is a US-based private equity business, they've done it many times in the US with big success. This is their first foray into the UK market. And I think because it's worked out so well in the US, and the UK has a lot of similar ingredients in that the US market has, not necessarily in terms of scale, but that you'll see a lot more private equity funding for buy and build strategies in the UK. And there's good examples of that already. Access Group is one which has had huge success, and Advanced Group as well. So I think just the UK market, because of the way it's structured, because it's a very robust tech has a very robust tech sector. There's a lot of fragmentation, and it's an easy place for people, at least large private equity buyers from the US, to deploy capital. Similar language, strong legal system, liquid markets. It just makes it slightly easier, I think. We've had good success. We've been going for just over 3 years, and we're doing almost an acquisition a month. If you went into a market where there just wasn't the number of companies that you could acquire, it would be hard to do a buy and build strategy. But in the UK, I think, is just a deep well of small to medium sized tech companies that you can roll up, frankly.
Thanks, Joshua. Definitely something to watch. So, does anyone want to add to that thread? Nathan, yeah.
Just really, really quickly, conscious of time, Ollie, but I think just adding to what Joshua was saying, I mean, private equity investors work on a timetable, typically 5 to 7 years. They want to get in, build and get out, and they're building valuation. So, it takes time to do that. And we've already, one of the reasons I'm sure is fueling a lot of this is the scarcity of resource that we've talked about. It's hard for businesses they invest in to find the right people, get them up to speed, and get them deployed. And so, it makes a lot more sense to just go around buying up other businesses. It's just a lot quicker to achieve that goal. So that's all I was going to add to that.
No, thanks, Nathan. Definitely, something to watch in the UK, isn't it? Those were the questions that I had. I think we managed to cover quite a lot there in a short space. So really, really thanks to our panel. We have had a question come in from an audience member. It says, last year, several reports found the UK tech sector has a diversity problem. Is it as bad as they say, or are we moving in the right direction? And I guess that's male, female, and ethnicity is implicit in the question. I don't know who wanted to kind of start with that one.
I've got a couple of stats that hit home, which, just 88% of Black founders in the UK self-fund at least part of their venture, and more men called John have raised investment than Black women in the UK. And 68% of women and 61% of men believe the ecosystem has failed to improve opportunities for underrepresented demographics. So there's a whole list of statistics like that which show that it is a problem, and we've got to get better at it. And that's why one of the things that Tech Nation did, we launched Libra, which was a growth acceleration program for underrepresented and Black founders and the Black founder experience. And we're looking at how we can do that for female founders and also neurodiverse founders. But yeah, the stats are there that even if it is moving, it's not moving fast enough in the right direction.
I know this is a difficult question, but what's the kind of timescale between, obviously action and putting in things like initiatives to those stats being changed? How long do we have to wait, do you think?
We're behind. We should have moved the needle by now. I don't think any of those stats are comfortable listening for anybody.
No, of course, but do is this something that if we're here in 10 years, 15 years, that we're gonna see different outcomes?
Well, hopefully. We've also got to balance some of the other trends, such as levelling up. And if we're putting more investment into levelling up, you could discriminate against female founders and Black founders who are more likely to be in the southeast. So it's how do we balance all of these different trends and still get a really good outcome?
Thanks. Yeah. Did anyone else want to kind of add to that question?
I'm not sure if it's representative, but like I said, we bought 35 businesses and only one of them was owned by a woman. I think that the tech sector in general is underserved by females. There wouldn't be as much of a shortage probably if it wasn't for the fact that half of the population is just not participating. Not to blame that. I think it's just for whatever reason. It seems to be a very highly male dominated from a founder perspective and even from a worker perspective. But
that is interesting.
That can't just be a coincidence. I
think you're like you said, out of those 35, I don't think that is a coincidence, is it, Joshua? Nathan, sorry.
It is a massive issue. As Emma says, it's taking too long to move the dial, not move the needle. Some of this is going to take a generation in terms of getting more kids through STEM subjects later in their education. and actually getting into the tech sector. But tech is going to become even more pervasive over the next 20 years. So people are going to have to take more of those subjects. There are going to be more people churned out of schools and higher education looking to focus in, tech, life sciences, advanced engineering, because they'll have to. But there's so much more that can be done in the short to medium term, and that's where the sort of sector really needs to, I think, focus its attention. There are movements. We have more sort of founder-led VC businesses looking for female-led ventures to invest in, which is great. And we've seen some success there, but there needs to be, and it's not, it's not just about gender, it's ethnicity, it's all sorts of things, but there's so much more that needs to be done. And Joshua, that statistic that you came up with, I think probably is representative, sadly. Glyn.
I can just speak to this sort of the incubators. I benefited from a bursary, which was at Set Square when I was in my previous life as a tech entrepreneur. So that was very beneficial. But I didn't actually know about it until I was just in conversation with someone, even though it had been advertised. And I think there is this danger in terms of how the tech market is moving so quickly, where we will find, female entrepreneurs, people from ethnic backgrounds. Often there's a need for those who want to invest in those type of tech businesses to actually go where those people are found. And that takes a certain amount of, sort of lifting up stones, uncovering, and trying to move the needle in terms of what is the usual way of advertising. Let's say, for instance, that population may not be finding things on LinkedIn adverts, but if you go to, sort of their clubs and different areas, you may start to find where that talent is. But to your point, it's going to take a while. But I do want to say that even when I was in London, we rented space at the Google campus, and the Google campus did a lot of activities around Afro startups, women in technology, and they ran a lot of events whereby you were invited to bring others who could actually see what these investors are looking for and actually get sparked into that. So I think the more of that happens, is great, but there is a sway happening. And I think amongst the incubators who are working with startups, they're in a really unique position to effect that change.
And Glyn, you kind of just sorry, Nathan, just touched on it there with the incubators, and I know that they're doing an amazing job. Can they do more? Is it that they need more funding? Do you think?
Yeah, absolutely. I think even the bursary that I received, I was funded elsewhere. The bursary was great, and it was more about having an office space and a community and network to be amongst, which was so important in terms of a lot of these people who, so let's say from women in tech who are working in jobs but have a side hustle, or people from ethnic minorities, they're just not in the compass that they need to be. And if these incubators can provide them with the compass, rub shoulders, I managed to get like a surgery with VWV, which was free of charge in the incubator, which you don't have access to that as a sort of an ethnic founder by yourself in your bedroom sort of thing. So there are those type of things that could really, really make a big difference, but it comes with funding.
Nathan, sorry.
Make that point. I mean, obviously we know Set Square well because we run their law and residence program, but they aren't the only ones that are doing this. And I completely agree with Glyn. They are in an almost unique position because of what they're about. It's about cultivating those ecosystems and encouraging people in a really soft sell way to get more involved, make introductions, get involved in these other networks. So I think they are doing some fabulous stuff, but it does come down to funding. Set Squared is dependent on other programs and other funding to make these things happen, and there just needs to be more money piled into it.
Just add to that, I think a lot of what I agree with everything we talk about in terms of founders and the communities and incubators, but you wouldn't want to miss over leadership teams. Even if you're not in the founder community, the leadership team's representative or the team management team is there. And I feel like that's a huge part. It's very, very complex, but there's layers that need to be thought about across diversity. And it's not just founders. It's does your team really represent your customers? Really? And then have you thought about that? Have you thought about diversity in every sense? throughout your organisation, never mind just the people who started it off. And I think that's just can't be forgotten. I think they kind of correlate in a way. You run a leadership team. I'm sure someone's got a stat somewhere that says people on the leadership team start up businesses because they go, well, I can do this better myself, and off they go. And actually, that's a big part of it.
No, there's a good point there, Ollie. Did anything? Did anybody, sorry, want to add anything before we close? No. Well, no. Thanks, everybody, and thanks for tuning in as well. And thanks for that really interesting and important question from our viewer. This was the Business Leader Tech Month debate sponsored by VWD. So thanks for tuning in. Just a quick shout out as well. It's that way. Sorry, our Scale Up Awards entries are open for them now, so please do go and have a look at that. It's businessleader/scaleup.co.uk. But yeah, thanks again for tuning in, and to our fantastic panel. Thank you.